challenge of bank financing in the UAE. Access to finance has proved to be the biggest challenge SMEs face, in particular, given the strict lending restrictions imposed by banks. Banks in the UAE have regularly considered SMEs too risky to be bankable, cited the following concerns: inadequate financial management, whether weak business plans or unsystematic filing records, lack of security or collateral for finance, one-man show kind of leadership at the expense of strong management and corporate governance. For SMEs, securing finance can be challenging, notably because of the company's size, lack of financial history on which the banks can base lending decisions, difficulties to leverage collateral in traditional debt relations. Newer, fast-growing companies with a higher risk-return profile need substantial amounts of funding to finance projects with higher growth prospects, but the associated profit patterns are often difficult to forecast. Most SMEs see few alternatives to traditional debt. They find themselves impacted by a financial gap, what we call the growth capital gap. Debt financing, is it right for you? There is a certain art to balancing fundraising. While too much debt capital can get a company into trouble, on the other hand, a company might be missing out on growth prospects by not taking into consideration all available funding opportunities. Bank lending is the most common source of external finance to fulfill cash flow and investment needs. Traditional debt is generally a low-cost way of growing your business while retaining full ownership. When considering debt capital, such as bank loans or invoice financing, the main drawback is the interest that must be paid to the lender, and the control the lender has over your assets, especially when times get tough. A failure to repay loans can result in insolvency and/or loss of control over your business. The elephant in the room: bankruptcy laws in the UAE. Many banks remain reluctant to lend to SMEs, citing several cases where debtors have skipped the country in light of financial difficulties. New amendments to bankruptcy law favor debtors by giving them greater flexibility and protection in the event of insolvency. UAE's revised bankruptcy laws will support SMEs with a new mechanism whereby if SMEs face financial difficulties, creditors are prohibited from filing for bankruptcy during a specific grace period. Because of the economic pressure created by the coronavirus pandemic, in the UAE's new credit guarantee is further expected to boost lending in the Emirate. However, some banks remain reluctant to lend to SMEs. So what are your alternative options when looking at bank financing? There are a variety of products and services that will help your business succeed in the UAE while avoiding the rigid requirements of bank loans. Regular working capital facilities, collateral-free business term loans, overdraft facilities, project financing, parameterized lending are some of the tools that can give you the liquidity they need to focus on your core business and growth goals. Facilities such as export financing provide you with a full suite of trade finance benefits, including cash advance, credit protection, and collections and reconciliation services. Another avenue is asset-based financing. Working capital and term loans secured by accounts receivable, inventory, machinery, equipment, and/or real estate. These kinds of arrangements result in accelerated cash flows without the burden of associated debt. It will improve your company's leverage and give you room to grow. Ultimately, build a strong working relationship with your bank. As an SME, you must address the confidence issue by enhancing communication and trust between yourself and your bank. Maintain audited financial statements, focus on bookkeeping using creditable auditors, maintain good corporate governance, reinvest profits to support business growth, be fully transparent when discussing your business's challenges, such as liquidity crunches or delayed receivables, to work towards a suitable solution. All of this should make your bank more comfortable and ensure faster processing of your financial applications.